As George Osborne prepares to give the last budget of this Parliament on Wednesday, the UK economy seems to be on strong footing. Growth is higher than in most other rich countries, and living standards are finally on the rise thanks to rising wages and falling inflation. But how sustainable is this recovery, and what exactly is driving it? Discussing this with me today is George Buckley, Chief UK Economist at Deutsche Bank. Welcome, George.
Hello.
So we have a happy George Osborne spending some money here, and it seems like lots of people are earning a bit more now over the last few quarters. Is that right?
Well, I think consumers are going through a bit of a renaissance at the moment. As we can see from the chart, wages are starting to go up. They're going up from a very low base indeed, but they are starting to rise and at a much more quicker pace. The other things are that we've seen inflation fall because of lower utility bills. We've seen petrol prices decline. Households have rebuilt to some extent their saving ratios. We've got debt levels as a proportion of incomes coming down. Mortgage rates are at the lowest they've ever been. It's not really surprising that consumers are doing so well. They've been growing now for the last 3.5 years, and I think it will continue to drive the economy during 2015 and beyond.
Right, and this is certainly having an effect on consumption. Let's have a look at the second slide you brought with you. And it shows that actually consumer spending is going up.
And this is a really important part of consumer spending because non-food retail sales is really that sort of underlying core discretionary portion of consumer spending. It doesn't include things like your petrol or your food, stuff that you're always going to consume. It's really that discretionary portion. And you can see from this chart that non-food retail sales are running at around about 7%. It's pretty clear what consumers are doing with that money. They are spending it.
So in a way, the fears that falling oil prices would start some sort of damaging deflationary cycle doesn't really seem to show up in the numbers.
Not yet, and certainly inflation expectations have fallen, but they haven't fallen beneath, at least in the long term or the medium term, haven't fallen beneath the Bank of England's 2% inflation target. On most measures, they're between 2 and 3%, which is still encouraging. They haven't fallen excessively sharply.
So looking forward, how do you see the UK recovering continuing? I mean, will consumption be matched by other components of spending, or do you fear the UK is a bit too reliant on consumers?
Well, we're forecasting 2.5% growth for this year, 2.25% next. But one thing which really does worry me is exactly what you said, is that the consumers are far too dominant in this expenditure detail that we're looking at. And the way to think about that is that even with the election coming up, whoever wins the election, we're probably going to see a continuation of austerity at different rates, potentially, depending on who wins that election. So government spending is not going to do particularly well. We have investment, which might be hit by the fact that oil prices have fallen. You're not going to get oil companies investing quite as much, and maybe we'll see in the budget some tax breaks for oil and gas companies. Also, the EU referendum, or potential EU referendum, if indeed the Conservatives manage to be the largest party and in some senses win the general election, then an EU referendum could mean that all of the inward investment we're getting certainly becomes more limited. We are the second biggest country in the world behind the US for inward investment. We're very fragile if that inward investment dries up.
And then sterling seems to be gaining some strength. That's not very good for export, is it?
Yeah, and that's the last part of the expenditure detail: exports and imports. Sterling has obviously recovered, particularly against the euro. It's up about 17% on a trade-weighted basis over the past couple of years. It's a very sizable rise. But that does mean also that we've got a double whammy effect. Europe is still weak. Certainly it's improving, but it's still weak. And at the same time, competitiveness is looking a lot worse because of what's happened to sterling versus the euro. And at the same time, imports might well be boosted by, going back to what we talked about at the start, the rising consumer spending. That's sucking in more imports. So net exports not particularly good. And I think when you bring all that together, you think, well, there is a risk that consumer spending might be the only game in town.
Thank you very much for being with us today, George. So George Osborne can look back to some good economic data over the past few quarters, but whether the future remains as rosy, well, that remains to be seen.